Hello YouTube! The S&P just crash landed on a key level of support found at 382. The last time we crashed and landed at a level of support, it was at 371. And before that, 362, which means we're getting down to basically within the $2 range of 360, 370, and then 380. This is going to be so important today because as we look here at the chart, we are currently trying to digest the weekly lows found at 388.42 and 390.04. I'm now going to remove all these lines because we have a dominant pattern in here and we cannot be oblivious to the fact that we are currently pointing down. So the path of least resistance as of right now is currently down. We are also right around that negative 20% mark. We actually opened up below there this morning. That is at 384.00. Really important area. What's really important to note as well is just that we held last week's low by about 7 cents. We gapped down, pumped up, and that is what we call a green dildo. And that's a green dildo because there is no wick. It's just a real body. It is thick, it is juicy, it is vibrant. We're going to try to explain exactly why this happened and where we go because our final boss, Jerome Powell, is going to be faced off with us on Wednesday. All right, so what actually drove this? We're going to jump here to our daily chart, and we're going to note here that, that green line, so we got really close to support, and what did we do? We bounced. We maintained our higher low, and what's really important here is just that we have to understand what actually happened. What happened today was that we are unwinding what happened on Friday, or triple witching. And as we gap down, the low of the day is where? It's exactly at the open. Let me just double check. Open at 0.26, low was 0.18. We pushed off right at the open. And what was so important today are three levels, actually. Three levels here, and same thing on QQQ, or the Qs. And that's really important because we noted that we closed really close to the Friday low on QQQ, or there was not really much of a gap, but basically the exact same candle. So if we now go back and have a look at SPY, what happened was we were battling with three levels today. I'm actually going to snap these, and then we're going to have a look at the short-term time frame because I did excellent trading off these levels today. Had a really nice day today. I am happy. I am green. It is good. So there's our first level. We're going to make this one green because it's support. By the end of the day, these were all support. We're just looking at where the volume is at the open, at the close, and at the high. Now we're going to zoom into our 15-minute chart and what happened today. Oh my goodness, right? Whoa! It's like it played almost perfectly within these levels. Yep. So gap down, pump up, backtest the open here, push off, push all the way up to the 50 MA, backtest 384, hit 386.2, backtest the 50 MA one more time, and then blast off into the close. So those three areas are really what were holding us back today. And after we did a push-pull and finally pulled ahead, the bears are flexing. There were two key areas once we got through there that I was really looking at. That is our daily low here at 388.42. And then we have our Friday low here at 388.78. We did push above there in after hours, but in the cash market, we did not quite get there. So why did we do this? And why did it have that follow through that we were talking about on the Friday end of day stream? I'm going to read you the same article we looked at before. 3.2 trillion reasons why we saw a move lower into last Friday. Market makers seen selling equities to hedge their positions. What does that mean? It means they were able to hedge or get back to where they are neutral by what? Selling their equities. If you look at today's candle, does that not look like someone who was like buying all day? Maybe buying back what they sold, right? Market makers seen selling equities, not shorting the market. They're selling their equities, right? Selling Apple, selling Tesla, selling Microsoft, selling all those stocks. Why? Because that's the way they're able to reduce their exposure, but also try to get the stocks down to an area where it's not going to hurt them as much. So there was a buyer in there all day, fat finger buying, buy. And as we noted on the weekly chart, this is going to be very important because as we hide all these lines, now if we keep in mind the exact same thing we noted for the daily chart, we have that what? Setting up here on the weekly, where we got to get through 38842. We got to get through 39.04 before we what? Battle for these real bodies. And that is so important because as I laid out on the weekend deep dive, when we have these bullish and then bearish engulfing candles. What this really means, I'll try to explain myself here for one moment, and then we're going to move forward. So when we have a bullish engulfing candle, it means that at one point during the week, the bears were actually in control with a lower high and a lower low. And then by the end of the week, oh my goodness, were they wrong. Same thing here. The bulls were initially right with a higher high and a higher low. And then by the end of the week, oh boy, were they not. So because we're so close to that inside bar and the range is fatter now, we're basically forming a megaphone. Whichever way this weekly candle goes is going to be the deciding factor for me. So we need to basically get up here to 411.74 or an additional, from here, roughly an additional 22 points, 23 points for us to print a higher high. And until we print a higher high, there is no way I am longing this market. Doesn't mean I'm in there shorting the hell out of it at the low of the week, or that I'm not willing to scalp long. Of course not. I like making money. I don't really care which way. As long as it's an easy trade with good risk reward, I will take a shot. I'm just mindful of positioning and total size because we want to make sure we're going the direction of the market. So what's really important here is just that as we're battling for these lows, now what we need to do is to make sure that we are digesting them in a way which makes sense, but also we understand this is what a weekly candle looks like. Ask yourself this. If we close where we are now, this will look like a, again, gap down pump up week if we hold at least 388.5 into the weekly close. However, now what if Jerome on Wednesday is actually a sell? And I got a feeling why this might happen. I generally look for the opposite move post OPEX for the true move. And I would also note that looking here, this looks like it is them trying to hurt the people who were already hedged, already short, and are starting to run off a little bit. There's also quite a bit of shorting at the open. I mean, I'm talking about people buying puts for October, for Friday, for Wednesday, and for all the different times. So as I look forward to here on Wednesday, I'm asking myself, okay, well, what would a bearish candle look like now? Well, this would turn into the open and close. We'd have a real body right here. That would turn into a wick, and then we could have a shooting star. An inverted hammer. Why? Well, if we open here and we close below our open at 382, it means we're printing a lower low, and we're going to have an upper wick here. So that would be the perfect bear candle. So does that mean we jump in head first here to short it? Not really. Where do we know we're wrong? Once we get up to 412. That's like a long time to remain wrong here. It's okay to be wrong, not okay to stay wrong. So I understand what the market's doing, but I still do not like the idea of longing more than a swing trade or an investment right now, just because I think these things are going to be potentially pretty devastating. And if I'm wrong, I will know by Wednesday close and then by Thursday, but really by Friday at 4 p.m. So if we can print that higher high, or if we start to see momentum to the upside, I'm not going to ignore it. I'll be mindful of it, but I got to see vol, I got to see price action, and I got to see conviction from these bulls. So the stage is really set now, and over the weekend I really talked about that. I'm going to review one more chart here, and then I think I'm probably just going to leave it there. I don't want to take away from the weekend video that I prepared, where there are a lot of thoughts, a lot of notes, and all I'm going to point out here is that we have a triangle, which are the blue lines. So we know the blue lines here, and they're currently pointing down. As they point down, we also have a pink line here. The pink line is going to be important, or the important trend I see inside of the blue channel. And then we also have 3896.5. That 3896 and 3872 are going to be our weekly gap. Let's remind ourselves where that comes from. Why? Because ES is going to have different levels than SPY. So if we look at both, we will understand the whole picture here. So we're looking at right here, from June 6 to June 13, we have a weekly gap. That is 38965 to 3872. If we zoom back in here to our hourly chart, we note that, okay, so we opened there, we pushed down to 3872, pushed down to 3855, which is my lower trend line, and then we pushed up 3872, 3896, and then we blew through there. That's how we got to here. But we're hitting the upper trend line. So now we're still range bound between the downtrend and our downtrend here. So for us to break, we just have to go sideways now. Sideways for the bulls and getting back above 3959, or roughly 4 more points on SPY, starts to look a whole lot better. So with that said, I encourage you to watch the video that'll come up here in a moment, which goes through my weekend thoughts on how the stage is set for the Bulls or the Bears to clinch it. I wish you all the best of luck into this and to the rest of the week, and we face off with our final boss on Wednesday with Jerome Powell. Thanks so much for watching. Look forward to seeing you on the next one. Thanks.